Fed announces a 50 basis point hike as expected, but throws in some dovish language. That drove the markets higher. We'll talk about where to next on today's edition of 3 Minutes on Markets and Money. Yesterday, the Federal Reserve, exactly as expected, said they will hike 50 basis points and will begin to taper their balance sheet. As we said yesterday on the show, any type of news, and really even non-news, could likely spark a rally in the markets because we have such negative sentiment. Investor sentiment in terms of both retail and professionals is some of the lowest levels that we've seen at the bottom of bear markets historically. Also, investor positioning very light here as well. A lot of professional investors underweight equities at this point. So that provides that fuel for a rally in the markets with a bit of good news. And we said yesterday, any type of good news, or really if the Fed just goes along with what they've been laying out, that could drive a rally in the markets. Well, yesterday, not only did the Fed stay to their plan, they actually gave us a little bit of good news here by saying, first, they're not going to taper their balance sheet as fast as previously expected. They're going to start at about $47.5 billion on taper starting in June. That will increase over 3 months to $90 to $95 billion cap on that tapering, which was what was expected from the Federal Reserve. But the other side is markets have been predicting that the Fed could be hiking rates by as much as 75 basis points. Jerome Powell yesterday saying that has not been discussed, not on the table. That piece of news was actually the bit of dovish news the markets needed to create a very strong rally. And yesterday, markets rallied by about 3%, starting to push up here at resistance at the 20 and the 50-day moving average. Again, as we talked about yesterday, we do have a very defined kind of downtrend in the markets currently that is going to intersect right at this 50-day moving average. Also, if we take a look at retracements from the lows and look at the retracement from the low of March and the peak in March, what we see here is about a 50% retracement of that rally right there at the 50-day moving average. So there is numerous levels of resistance right there at the 50-day moving average. That's the initial target we talked about yesterday. If markets get there, that's where you want to start raising a little bit of cash. Rebalancing the risk in your portfolios again, because we're not quite out of the woods just yet. We do have a short-term buy signal that is now triggered. Money flows are positive, and the MACD is starting to turn up. So this is giving us a bit more of a bullish pickup here for the markets. Now, this morning, markets are going to open a little bit lower. We'll be opening down about 25 points or so on the S&P, about 150 on the Dow. The question will be whether or not buyers come into the markets after the open this morning, push markets higher this afternoon. I think that's possible. And if we do that, as we start to get this oversold condition moving back up, cross this MACD into a positive territory, this target that we're talking about here at the 50-day moving average becomes very viable. Now, a break above that 50-day certainly sets us back for a rally back to this previous extension and the 200-day moving average. So we do have some upside from here. It's likely limited, particularly as the Fed will continue to hike rates. The economy is going to continue to slow here as we go forward. We will see weaker economic growth. Housing will turn down more as we continue to kind of slow the economy. Consumption will be contracted as well. So there is certainly risk here, and we do expect more volatility in the future. But right now, we are starting to get that bit of a bullish bias here short term that could lead and give us a better opportunity to rebalance that risk. So if you haven't liked this action this year so far, you have too much risk in your portfolio. Time to take advantage of that and get yourself in a better position. I'm your host, Lance Roberts, for 3 Minutes of Markets and Money. We'll see you next time.